Hi, good evening. If you haven't been here before, my name is 𝗖𝗢𝗡𝗘𝗖𝗧 and I am the Scruffy Trader. And if this seems all a bit odd to you, it is to me as well, because I'm not used to live streaming and I'm certainly not a techno. So if you can help me, that's great. I do have a chat box in my peripheral. So if there's anything wrong with the stream, whether it's audio or visual, just drop something on the chat and I'll see if I can try and fix it on the fly. Okay. Hi Brian, hope you're well. Can you just do me a little favor and just tap in the chat and see if everything's working? Because I'm not rightly sure whether I've got this working yet. Hello Nick, hope you're well. But I think I might have cracked it. And the idea of tonight's little stream has come from Ivan from the Scruffies. Little salute to you, my friend. I hope you're awake. And he wanted to know a little bit about stop losses. But there was also a comment from 𝗖𝗢𝗡𝗘𝗖𝗧. And he didn't quite understand how I opened up multiple trades, one lost and some didn't. So I thought it'd be a good idea to kind of go through stop loss placements and give you some kind of background behind stops and risk and things like that, because I think a lot of the time when you're talking about trades, there's too much emphasis put on the profit. And there's not enough emphasis put on the management of the trade. You see, for me, stops are just your last resort. That is it, you know. And there is many ways to manage a stop. Tight stops, wide stops, no stops. Hi, Ethel. I hope you're well. Personally, I do not like tight stops. And I'm going to go through that when I come on the screens. But I do trade with stops. Okay, there are strategies out there that are around that have no stops. And I'll touch on them as well, because there is a strategy that I'll put up for you guys in the squad over the next week or so that doesn't use stops. But it does have hard, fast rules that you must stick to. Okay, so it's a good strategy. It's a well-known strategy as well. So let me just sort of try and put these into perspective. So let me pull up my screens. It's getting good, this, isn't it? You know, I've got transitions and everything. What 𝗖𝗢𝗡𝗖𝗧 got confused was an oil trade that I took here. I hope you can all see that. And as you can see, that one of them lost £18.64, but then there was some winners. And what I'm going to do is I'm going to pull up the chart and that trade, and I'll talk you through the stop and sort of spend 20 minutes or so just to give you an idea. All right, and I do have the deal ticket of that somewhere as well, just so you can see. There it is there. So this is the deal ticket from that trade. Okay, so you can see it's a verified trade. Okay, and it was from the small account sheet that I posted up and completed last week. So what happened? Why was it such a naughty trade? Well, when I initially entered this trade, it was all the bigger picture told me it was going down. Okay, so I waited for a cross of a support and resistance line, which was here. So it broke it there, second candle, reasonable entry here. So good so far. Happy days. The worst thing happened. The market immediately turned against me. As it did, pinged in and off it went. So where did I have my stop? Well, my stop was up there, well out of the noise. Okay, and the way that it was built up is very simple. I work on a kind of a rule of two. with my stops. In other words, the second structure point. Well, there's the first one, the first support and resistance line. There's the second one. So my stop is naturally above it. But that is the hard stop. That is where enough is enough. I've got it wrong. I have to take my medicine and call it a day. But that's not just what stops are about. You see, there's various types of stop. You can have a stop that's just based on a swing high or a swing low. You can have a range bound stop, which is based on an ATR, and I'll go through that as well. And you can have a time based stop where it's based literally on time. So you will say this trade will last 1 hour. I enter at 2 o'clock, whatever the situation is, it closes at 3 o'clock. Okay, so there's many different ways that you can trade. And then of course you can have a hybrid of all of them. And I kind of use a little bit of a hybrid because I do stage into a trade. And that's what I did with this. Okay, and I'll explain it. So I ended here. I have a hard stop there, but I have mental stop. And my mental stop is normally about midway between the two, around this area. And all I'm doing at this point is, if the market moves up that far, I reevaluate the chart. I go back to the higher time frame where the trade idea came from. If I believe that that position has changed, I will kill the trade at that point. I won't even question it. I'll just stop the trade out. And that is it. So for all this looks ridiculously bad, it is not. It is there to stop this sort of thing where you see a large wick. It is just the end of a trade. You know, I got it wrong and I haven't paid attention, but it doesn't kill me. All right. So what happened? So as it moved forward, it rattled away from me. Okay. The market came up halfway, and I was talking to you guys last week about this when we're doing it. The position hadn't changed on the higher time frame. I still had belief in the trade. So what I do is I stage into the trade. In other words, I have more positions. I'll open up a little position to start with, and I will add to the trade. Now I'll also add to a winner, but this is sort of for my stops. So I looked at it around this area and I thought, okay, I'll start staging in. But I was waiting for a reversal. Well, it never came to up here, and I already had 3 orders stacked, and I moved them up. As each candle closed, I moved the orders up behind it all the way till eventually it took me in around this area here on this dotted line. And all 3 of them opened at once. And that is the deal ticket that you're seeing, because they opened and they came down. But the market started reversing down here. And if I pull up my deal ticket, I'll show you and you'll see exactly. See, 4, 5, 6, 6 and 6, 7 is the area that they were coming out, which is around here. And basically all I'd seen is, I'd seen that come down. It was paying off the losses as it went. But as it reversed, the net was in profit, just killed the trade, and I could sleep easy at night. But for all these 3 trades were added into what is deemed a loser, it wasn't, because I still had belief in the trade. I still believed my direction was correct. And all 3 of those orders, stop loss, was in the same place. So that actually cost me very little money to enter the trade. So even if I got it wrong, it wasn't going to cost me a lot. But then it turned round, came down, paid off the loss, and I ended up with a net profit. And as this moves forward through, you can see it hasn't gone anywhere near the stop where I said, and I was correct in my initial analysis. So that was an idea of just entering into a trade by managing positions. You know, so you've got 4 positions, you enter with 1. If it went in your direction and you were quite happy, you could enter in again and build up a profit that way. Or in the case of this, you do it in reverse. You allow yourself certain areas where you're going to enter into the market and you add your orders in. Still risking exactly the same amount of money as you initially were going to, but you've just staged your orders. So that's just kind of one way to manage a trade. Now, another way, which is what you would normally see in this situation, is, and you'll do this over and over, and it's the exact reason why I don't like a tight stop. You will enter your market here. You can see that swing, and you'll put your stop here. Just pull this down. I'll change your colour so that you can see it, because I don't think it's the brightest. There. So you put your stop there. That's what most people tell you to do. But what happens all the time? Market swings round, takes you out, goes up to a level, comes back. And that is the exact reason why I don't like tight stops. Hello, Smith J. Smith. Everybody can thank Smith in the chat, because it was the comment from him. I am assuming that you're a boy, by the way, so very sorry. It's a male-dominated industry. If you're a girl, I am very, very sorry. Sorry, lost my thread there. Tight stops. If you watch any of my videos, you often hear me say it's death by 1,000 cuts. And it is. Because you would, in this case, well, let's have a look. See how many times you would have been caught. Enter the market here. 1, 2. Turned round. If you had your stop up there, that would have took you out. So you come down, you have another bite of the cherry. Takes you into the market. Put your stop up there. Happy days. This one, you might have got away with it. But as you've just seen, you didn't. So that's 3 bites of the cherry. All right. How far is this? Let's have a look. So you're entering here. So that's there. So just say 40 odd for easy figures. 120 ticks. Let's have a look. So that's 128. There you are. Your 3 losses is equal to 1 of my stops. But I would have only traded this once in a day. And you've heard me say that. I'll trade once, twice a day. And if there's any of you guys, well, there is some of the guys from the Scruffies in there, drop it in the chat and you'll verify that I do not dip and dive into the markets all the time. And I tell the guys to calm down all the time. Look for 1 or 2 good trades a day. Yeah, speak to people, there's 3 trades, all of them would have lost before the winner came in, and your collective losses is equal to my 1. Does that kind of make sense? I hope so, because that's kind of the way I look at it. I went through this many years ago. When I first started and trading and one thing and another, I made some horrific mistakes. I really did. And bear in mind, I've been in this game 15 odd years, so if there's a mistake, I've probably done it. And the biggest mistake I ever came across, and I know it's controversial, I think the #1 reason most people lose money is stops. I genuinely do. Because you're constantly told to have them tight. But the market is not tight. The market is fluid and it moves in a fluid motion constantly. as you can see right here, okay, you need to let it breathe. And this is where the next part of stops come into it. So I'm going to clear all of this off. And we're going to go through a couple of stop placements. So you've decided that you're going to enter a trade for whatever reason. Let's just say it's around here. All right. So you put in a nice level here. Okay. It's just because it's in front of me, guys, and I want to make it as easy as I can. And you see another range there. All right. So there's a range. You've defined a clear range in front of you. So you can now look at that and you can think, okay, I will have double that as my stop. Dead simple. All right. There you are, 48. Put your stop under there. And what you would do is, that first point is your mental stop, halfway. And then your hard stop is down there. That's allowed that to breathe based on the range that you're looking at. Now, if you can't work it out like so, you would just pull in the average true range. And then you look at something very high up and you go double the hourly ATR, or if you're looking for a bigger move, double the daily ATR. But basically you're letting your trades breathe. All right. Now another way of doing it is through time, and I mentioned that earlier. So you're going to enter on an hour. I'll just drop it to a 15-minute chart just so we can see it. Let's have a look. So at 12 o'clock you're going to enter. Okay. Vertical line. You're entering on this candle whatever direction. It's long. At 1 o'clock or 2 o'clock, whatever. So say you're going to do 2 hours. 2 o'clock. Regardless of the situation. Doesn't matter. You end your trade at 2 o'clock. It's another way of doing a stop. And stops are... How do I put this? I call them the devil because I genuinely don't like them. I genuinely don't. But I understand why you need them. So that's why mine are always wide. And it's always out of the noise is the easiest way I can say it. And it's very difficult because none of these sessions or whatever are scripted. They're just trying to explain what was asked of me in a comment. So if I just get rid of that, and I'll kind of try and explain this the way I would build it up. All right. If I have my levels in already, as you've seen, I'll use the second one up. If I haven't got a level and I'm going short on this point here, and the reason why I put it, because it's very simple. There's your push up. You can see it's rejecting the level, and it's a good level because you can see it right here clearly. Okay, so it's pushing down. Your first structure point is here. Put a little line in. First structure point is there. Okay, what happened? Well, it cracked that one straight away. There's the second one, and that's where my stop would be. It will be up here somewhere. And if you look at the line, if it's up there, and I follow that across, yeah, you're probably getting nipped. But isn't it a more sensible place? Because, yeah, that spiked me out if I had it very tight to it. But if it was just up there, just out of the noise, because if there's your level, then you've seen me do it. I put a fib on between them and I use my fibs. It just say gets there. But I'm also staging in all the time. All right, so I hope this kind of makes sense. And yes, Curtis, you're right. The amount of people who lose trades with tight stops is unbelievable. And I guess what I'm trying to get across is, don't be frightened of a wide stop, because I often see this. Some guys will have a wide stop but a very small take profit. In other words, the risk reward is out of whack. Now this is where I get pulled up all the time, because they focus too much on the stop. Your risk is too high. It's not, because I'm managing into the trade, but you also see me manage out of a trade, because I still don't know how far a market's going to go once I enter. If I clear off 10 pips, fine. Those 10 pips help offset the loss of any other trades that I put on that day. It happens all the time. In fact, I was trading today and I lost. There it was. All right. I've done next to out today because I don't trade on a Monday. But that lost and they got paid off, because this is that small account that you see me building up. And all you've got to do all the time is manage your trade. And I can't hit it home any clearer than that. I really can't. So, I don't know. You tell me. Ask me a question in the chat, because, like I say, this is all new to me. I'm not into doing live streams and one thing and another, because I've never really done them before. When I do a video, it's great, because if I screw it up, I can always redo my lines. So let's have a look. Take another way. All right. What we got? Let me check. Yep, always stopped out and returned. Indeed, Ethel, you're quite right. A lot of people do that. They will get stopped out and immediately dive back into the market. Why? I don't know. It's the emotional side. And another way of doing this is, as well, I guess, is go back to your range, put your little, you're going to enter the market here. This one will be brilliant. You know, just nipped underneath, have a nice tight stop under there. Wonderful. But why not buy down there? You know, so if you're thinking the market is going that way, you've got a 10 pip stop. Let's see where we are. That was pretty close if you were doing 10 pips. But who's to say that you couldn't have bought at 10 pips and then had your stop underneath that? So effectively you framed your trade down. So you're going to enter here, but instead you enter there with 10 pips. So you've actually framed down 10 pips. Many different ways, guys. Many ways. Hang on, let's have a look. We've got a question in. Hello, Cade. Do you find that emotions are the same trading a small account compared to having a large account? Believe it or not, this might be a little contrarian as well. It's easier to trade with a larger account than it is a small account. A lot easier. See, on my main accounts, I can take a lot of damage before it actually affects my salary, because the account is big enough to take it. On a small account, if you let one trade run away from you, it damages that account badly, very quickly. And because of that, the emotions run wild, because you know that one trade can damage you. And there's an old thing, one trade should never destroy you, but one trade should be able to make you. And it's all about make and break and all of that sort of thing. So I find small accounts far harder than large accounts. They genuinely are. Because if you think about it, if you've got what would you deem a large account? A £50,000 account is a large account. Now, if you dropped sort of £2,000 off that, it's a lot of money, but you've still got a huge amount of money to make money. You see, when you're looking at balances, a balance to me means nothing. It doesn't mean anything till I've actually put it into a physical bank account. So it's just a tool. And if I've got a big account, it just means I've got the best tool about. Still got to be very careful, and I've got to be very mindful of what's going on. But I can make a lot of mistakes and still earn a good salary. If I have, say, a £2,000 account and I let a trade run sort of £400 or £500 against me and it loses, I haven't got a lot of room to go with, because I can only do that maybe once more. I get 2 bites of the cherry, if you like. With a large account, you've got loads of bites of the cherry, so it's a lot easier to handle the losses, because you still know you're going to eat at the end of the week. Hope that kind of makes sense. But emotions is the killer. It really is. And one thing that emotion will do for you, especially if you've got a small account, is, and when I've been doing this small challenge thing over the last month, there's an emotion of I couldn't care less. And it's, well, I'll just trade that. I can let it run away. It's only £100. Don't matter. But if it does run away, you have to fund that again. So it kind of does affect your psyche somewhat. Personally, I prefer dealing with big accounts. I'm used to dealing with them, and that comes from former life. I'm used to dealing with reasonable large amounts of money. So yes, small accounts are harder to deal with than a big account. Well, that kind of makes sense. Genuinely do. Where are we up to? Sorry. I'm trying to catch up with the chat and keep this flowing. The whole idea of tonight was, one, a test, and secondly, to answer Smith's question. Stop placement is not difficult. It really isn't. The hard part with stops is knowing how to do it manually. You know, if you can't do it, set your stop halfway between. And hold on. You could have background music. It would be easy as there's nothing to say as it happens. It's very small. Small challenge. Oh, what? I could sing for you if you want, Davidus. Not rightly. Okay. Not rightly sure on that comment, but there you go. Thanks, I guess. Yeah, thanks, kid. I mean, these are the things that keep these things flowing. I'm no Steven Spielberg, and I'm certainly not a TV presenter. But I genuinely try and help you guys. I really do. And if I get asked a question, I genuinely try and put it into some form of context. And that's the only thing I can really do. And it's where the Scruffy Squad came from, and sort of my little blogs and things like that. Because I enjoy it. I genuinely do enjoy it. And hopefully I show you a trick or two along the way. If I was to give you some pearls of wisdom before this sort of all kind of wraps up, because I was only going to do like half an hour or so, it is less is more. So many times when I'm watching sort of, whether it's the Facebook group, the Scruffy Squad, or forums, whatever, you want to be in the markets all the time. And I understand that. You know, it's a natural urge. And that's where death by 1,000 cuts comes from. Because you're in the market too much. And your stops are too tight. So you're getting constantly stopped out. And to tell you about risk reward being, well, it wants to be 3 to 1 and all of this, but that only happens about 50% of the time, even less than 50% of the time. So by the time you've added up all of your losses, if you'd sat on your hands with a wide stop, you probably find that you've made a little bit more money. But that's just me. Stefan, I thought you were watching the children. Yes, Star Wars will be on a bit later. I will guarantee that. No, she's not doing the bikini. I've tried. She said she'd wear it if we went on holiday, but I think that was a double-ended insult because she knows we can't go on holiday either. So, happy days. So as I was saying, little pearls of wisdom about the markets. It really is less is more. Okay? And that is with your stops as well. Because if you have one stop that is equal to 3 sort of mediocre trades, I think that's better than taking 6 mediocre trades. You know, you lose 1 and you quit for the day. That is it. Whereas I see a lot of guys that'll be trading God knows how many times. There's one guy showed me his deal ticket and there was over 50 trades in a day. Ludicrous. Absolute ludicrous. You can't sustain that. You might have one day that's great, but what if you lost the next 25 trades? It would just cripple you. And that would be your emotional side as well. Okay. Andre, let's have a look. How much should a beginner trader risk percentage-wise trading capital on a 1500 account? It's really, it's a hard one to say. I always think that if you're dealing in percentages and sort of point, right, saw a strategy and it was just fixed stop 30 and it was for the DAX. Well, the DAX will move like that. You know, it'll do 30 in a heartbeat. So it doesn't work. A stop has to be where a stop has to be. For argument's sake, if you're going to enter a market for whatever reason, all right, you're where we are? We're here, all right. You're going long at this point. Your logical point is here, right? So that is a tight stop. There's a support level down there, all right? You can see that from here. So for me, it's here. So I don't even work out the percentages. I just look at where the stop needs to be. And then I'll work out whether or not I can afford to take the trade. And I hope that kind of makes sense, Andre. Haircut, yeah. Getting better. What little of it I have. So in this case, for argument's sake, you've got your stop under this support level. Give it a bit of room to breathe. It's going to be a 40 pip stop. And let's just say you're on £1 a point. Okay, so that's going to cost you 40 quid to take that trade. All right. If your account cannot take £40, either don't take the trade or half your position size. So then it becomes 20. And look at it from a monetary point of view. I deal in money all the time. You know, it's the only way that I can do it. And that's how we would do it. So don't get too hung up on percentages. Think of your own pain threshold. You know, if that's going to cost you £40 on your £500 account or your £1,500 account, and you think it's too much, reduce your position size. And then that way it goes back to the comments that were a little bit earlier up about emotions and one thing and another. It helps your emotional psyche, because if you're stressed, You'll not allow your trade to run, because as soon as it goes into profit, you'll snatch it. And if it's going further and further down to your stop loss, again, it'll stress you out. And these are things that you don't want. You don't need stress in your life. You know, just reduce your position size. And if your position size reduces to a point that you can't take the trade, don't take the trade. Just take the next one. Because one of the things is, you don't have to be in the market. If I'm doing an 8-hour day, which I often do, I can wait 4 or 5 hours till that trade comes into play. So just wait. Okay, where are we up to? The Brettster. I picked your email up as well, Brettster. Thank you very much. I dropped a comment on that. I'm going to try and do them reasonably regularly, yeah. At the moment, I'm trying to learn how to do all of this. I'm not a techno, I'm really not, but I am getting better. Stefan, it's your fault. You're a techno. You should have advised me. Where we are, maybe you can think it as this. When will my pen turn around? And there could be a stop. You're exactly right, Stefan. You have to be constantly analysing the chart. And does any of you guys play chess? I know this might sound an odd question for a stop out, but if you do, the greatest chess people think 2 or 3 steps ahead. And you don't do techno. Of course you don't do techno. You're not, well then again, you're an IT teacher. Ring him up. Have you turned it off yet? Sorry. He's got a good sense of humour, guys. Don't worry. He sticks it into me plenty. Yes, with chess, you are thinking 2 or 3 steps ahead. And that is the idea of staging a stop as well. You don't know if it's going to go in your direction or whether it's going to go against you. Well, if it is going to go against you, you have a plan in place. When it moves 50% against you, you can add an extra order in, because if it turns round, that can take out the losses. If it goes to 75%, you can put another order in, and again. And it's a little bit like a martingale system, if you want to call it a martingale system, except the martingale will double up constantly, and you need big pockets to do that. The way of averaging in, as in the way that I do it, is my risk is always equal from the point of entry. I'm willing to risk X amount of money before I take the trade, and then I just have stage points. Okay, so I hope that kind of makes sense. I genuinely do. But where are we at? But we nearly done. But you guys tell me, what is your biggest fear about when you're entering into a market? I know it's going to be, oh, I'm going to be taken out. But why is that? Is it because you hadn't planned the trade in the first place? A little bit trigger happy, or you weren't actually sure where to place a stop in the first place? I don't know. Who knows? Right. Or maybe not. Anyway, I hope this little experiment is kind of working. What I would say is, if you want me to focus on a topic for you, because I just want to do like one topic at a time, because otherwise get bombarded, and if I'm flipping from screen to screen and doing this, that and the t'other, it gets a little bit chaotic. But on a single topic, just email me. Let me know what you want me to discuss, whether it could be an indicator, the candlestick itself, whatever. And I'll genuinely try and make these, and I'll do them as you say, you asked if they're going to be regular. I'll try and get them as regular as I can. And as I get more comfortable with it, they'll flow a little bit better, hopefully. So I hope that kind of makes sense. What kind of strategy do you trade? Well, I trade multiple strategies. Jerome, how many markets do I trade? My main strategy is I trade levels. Everything is level to level, and it is based on momentum. I show the Scruffy guys it regular if they ask. Trading's very simple, guys. There's no magic pill. So many times they think, well, if I combine this indicator with that indicator and I have this special moving average, I'm going to be rich. No, it doesn't work like that. You could trade with one moving average. You really could. You just need to look at the bigger picture. But personally, for me, I work on momentum, and it's always level to level. And I'm looking for the current direction at the time. And that's what you see in the live trade. Okay. And it is always top-down approach. You might see me trading on a 5-minute chart, but the trade idea came from way higher. The small time frames hold very little weight. They're good for entry and they're good for fine-tuning and managing a trade. But when it actually comes to making a trade decision, they're quite hard work. And that's why tight stops don't work. So where are we up to? So many markets to trade, long, short, sitting on your hands is my problem. You're right, Andrew. You really are correct. Took me a long time to learn that. And it's one of the hardest hurdles that all traders have to overcome. Now, on a morning, the Telegram group lights up normally around 7. And they're all excited and they're getting into it. I'm normally having a cup of coffee and just watching the mayhem. I very rarely enter the market before 9 o'clock in the morning because I've learned how to sit on my hands. What happens is you see the markets moving and you think you're missing out, FOMO. So you feel you have to dive in. But think yourself this way. How many times have you just clicked the button? It's not even gone in your favor. It's just rattled away off in the opposite direction. And then you have to sit on a lot of heat for the market to come back. But if you'd sat on your hands and just read the market for 15 minutes, you'd have probably found you got yourself in at a better price because you probably got your direction correct. You just got your entry a little bit wrong. Okay. Where we got? Kid, let's have a look. Personally, not letting the trade run to take profits is hard for me. Now, that is a subject on itself, Kid. It really is. And it's one of the reasons why I scale. I've got a good idea where a market's going to move to because he will move from, well, you can see it. Just bloody computers. Where are we at? It'll go from a level to a level and it'll come back to the same level. There you are. And you can see it very clearly. The hardest thing is waiting for it to go. You get in here and you see it come to here, then it moves back up. At this point you'll be frightened and you pull the plug. You haven't let it breathe. I'm only human as well. And the one lesson that I learned to myself was scaling. You know, if I'm doing £5 a point, I'll just put 5 £1 positions on and let them close out as it goes down. It helps the psyche because you're seeing money going into your bank all the time. It preserves the bank account because every time one position closes off, it reduces the risk. And it also can be used to offset risk on the other trades that are still running. and then if it continues to go, result. So that's kind of how I do it. I like to scale. Another way of doing it is you can run stops behind a moving average. The crowd favorites is 14, 20, 34 and 50, and you just let them sort of trail down. But the markets test moving averages all the time, and it's how far you want to let it breathe. I personally like to target, so I'll sort of say, right, I think it's going to go here, so I'll target the level and then I'll space it out between with scale points. So I hope that helps. Where are we at? Last one. Following your principles and had a good day on the footsie. Thanks, Langers. Well done, Nick. Look forward to the next live session. You need to get out more. I just need to adjust the trigger finger. Shooting your toes. Yeah. We all suffer that, Nick. All of us. Even the best traders in the world have an itchy trigger finger. But there's certain mechanisms you can set up to stop that. And as we were saying earlier on about entering a chart and the market just running away from you. I know a guy who, once he sees his setup, he waits 5 minutes. Doesn't even enter the market with an order. You'll see it, you'll think, yeah, that's where it needs to be. He waits a full 5 minutes to see what happens. Then he puts his order in at the exact place he was going to. If the market's already moved with him, it many times comes back, enters the trade, and then away. But if it rattled off in the opposite direction, don't matter. I personally put a pending order in as soon as I see the setup, but I'll count 5 candles back and I'll put it under the lowest one. So it has to make a new low or a new high if I'm going the other way in order to enter the trade. So horses for courses. So that's it, guys. I hope that kind of answered the question for Smith. I genuinely do. And I'll try and set these up. But like I say, my contact details are easy found. You catch them all in the description. Just drop me an email of what you want me to talk about, or drop me an email of a question you want answered, and I'll put it on a camera like this and we can have a little chat, and I'll try and answer it as we go. And I hope that kind of makes sense. So it's the first kind of real one that I've done. If I've rambled, I am sorry, but I genuinely thank all of you. And if you're subscribed and part of the Scruffy squad, I genuinely thank you. I genuinely do. Makes all of this worth it. Okay. So thanks a lot, guys. Hope you are all well. Have yourself a good night. I'll see you again.